Welcome back to another Trade Alts technical analysis tutorial. This is the beginner series, volume 1, charting basic support resistance levels. This is such an important and critical concept to understand when it comes to trading. So without further ado, let's get to it. I'm really excited about this one. So the SR level topics that I'm going to be discussing, and by the way, it's support and resistance. That's what SR stands for. It's just so much easier to say SR and type out SR. So SR, anytime you see that, will mean support and resistance. So things that we're going to cover in this particular video, so for volume 1, we're going to cover the basic horizontal support and resistance levels. That's incredibly useful when it comes to trading, a really important concept to understand. Every trader should understand this critical concept of horizontal support and resistance levels, regardless of whichever methods that you trade. So it doesn't matter what type of trading style that you have. The majority of the trading styles that are out there all are based off of support and resistance in some way. So it is very important to understand support and resistance. Another video after this one's going to talk about support and resistance zones. So that's a slight variation of support and resistance that I think is worth its own video. But also it's likely probably going to be a pretty short video. And then to get into the VIP tier. So for those of you in the VIP tier in Discord, the advanced series, some of the things that we're going to be getting into is time frame based horizontal. So that's kind of a little bit of a different story, really incredibly useful. And not only being able to chart time frame based horizontals, but finding the most relevant ones, like which ones are actually worth being on your chart in order to, help you give you the best idea of how, the support and resistance levels look on your chart. And then how to find high probability trades using support resistance levels. So it's not only talking about support resistance, giving you examples of it, but we're actually going to take those examples. We're going to take the support resistance theory and we're going to put it into, the context of finding trades. So how do we actually use these levels? And then my favorite is the confluence zone. So that's something that we'll be talking about at a future date, but that absolutely is a really important part about support and resistance. All right, so the important things to remember when it comes to SR levels is you need multiple touches. So you're not going to have a support and resistance level that only has one touch. And I'll show you what that means here in the next in the next slide. But again, it's really important that you need multiple touches on this support resistance level in order for it to be valid. Number 2 is it's really important to identify correctly. So what do I mean by that? Well, if you identify the wrong levels or levels that aren't truly support resistance ones or ones that matter, and you use those to formulate your trade, you're likely going to lose money. So it's really important not only to understand the concept of support resistance, but to be able to identify the correct levels on your charts that are the support resistance levels you should be using. And it's also critical to understand early on. So before you dive in, I'd say when a lot of people get into trading, they're really eager to jump into the, I would say the harder or the more advanced type of trading styles that are out there. It's really, but you're doing yourself a disservice if you don't take the time not only to understand the basics of trading, but support and resistance in itself is such an important theory to understand. I think if you don't get a really good foundation when it comes to support and resistance, you're going to struggle in trading no matter what you try to do. And then last, but also very important, is do not force levels to be there. So don't just put a bunch of lines on your chart and, just flood your chart with different support resistance levels and, basically just do your best to try to trade off of there. Like you have to make sure that not only is the support resistance level valid, but it's actually one that's worth being on your chart, one that you actually has a good chance of being respected and is able to give you, the proper types of trades to be taken from them. So we're going to jump into some like very basic examples, and these are just ones that I hand drew because I just thought it would be the easiest way to kind of show you what a support or an SR level looks like when it comes to the chart. So basically, this green line that you see here is your support and resistance level. Because price is above it, you were hoping that this green line is going to be this support level, right? So when price is above your SR level, it's support. When price is below your SR level, then this is resistance. Okay, so again, price is above, that means this level is support. If price is below this level, that means it is resistance. So what's an example of a strong support level? So let's say price came from wherever it came from, all the way up here, bounced off of this line here, got a nice bounce, price returned right back to the same line here. This validates at this point that this, and again, if you see this bounce coming off here, then you know you have two touches. Technically, 3 touches makes a trend. So that's a really good thing to, I kind of have 2 different views on that actually, but 3 touches technically is what makes a trend. But oftentimes your 3rd touch, by the time you confirm your trend and you wait for another touch, sometimes it's too late and you miss the opportunity. So a lot of good trades can actually be had forecasting the 3rd touch and trading that 3rd touch. But I would say that's more, I definitely would not attempt that unless you are very comfortable trading. That's kind of more of an advanced thing that I don't think a lot of other traders actually talk about, but that's kind of definitely more of an advanced type of thing. But anyway, price touches the support line, got a bounce, came back down to the same level, bounced from it again. 3rd time, got another bounce. So this is telling you this level is very important, right? Very, very important. And then price moves higher. So this is showing you that this level is very strong. And this is definitely a level, again, depending what time frame you're trading, depending what time frame that you're trading, you would absolutely keep this level on your chart. Because if price was to come back down to this, this same support resistance level, you would want to be aware of what it is and what happens the next time that it touches it. Because historically, this has been a really strong support level. And here is an example of a strong resistance level. So it's exactly the same thing as support, except now it's resistance. So price is coming from below, right? You come get your first touch on this resistance level, price backs off, come back up, touches the same level again, price backs off, comes up to this resistance level and just can't push above, and then price eventually fades, returns basically lower. Now this is a very, I would say this is an important thing to understand, but it's kind of an elementary way to look at this. It's not always going to be this perfect. Obviously, if it is, then then this makes this level incredibly valid. And being able to trade this, with kind of a higher probability, I guess, because just simply put, if you see this touch here, price backs off, touch here. So this is showing you this level is very important. Price backs off, you come up for a 3rd time and you see it start rejecting, then you know that this is really strong resistance. So there is a trade potentially to be had. You could, let's say, for instance, short this level, and your invalidation or where you're wrong on this trade is simply if this level gets reclaimed, like if this becomes support, right? So like if price breaks above, then you know that you're likely wrong on this entry. So that's jumping ahead a little bit. But I thought it was important to actually explain to you a little bit like how you could trade this, right? Like some of the things that you could look for. And in this particular instance, you can see that there's actually the way that it's drawn. So again, this is very perfectly drawn to kind of show this example, but you actually have a secondary support resistance underneath here. So if I put a line that goes across here, right, then you would see that there's actually another red line. You could drop this down even. And the way that I accidentally did this, but you actually got a break of this secondary support level, right? And you get a back test as resistance, and then price drops down. So I did that on accident. But the funny thing is because you kind of see this happen a lot when it comes to trading. All right, so some important keynotes, some things to remember. Because with almost any measurement of support and resistance, the more touches of the level, it likely weakens the level over time. So what I mean by that is, if you get the same support resistance level touched multiple times, meaning like 2, 3, 4, 5 times, the more times that you get that level touched, the weaker it becomes over time. And I actually have a really good example of this right here, which I will get to actually a little bit later in the video. But it really demonstrates the more times that price comes down to touch this level, eventually it gives away. So once the support resistance level is broken, you can, and I actually talked about this previously, but once the support resistance level is broken, you can often get nice trades on the first retest of that level from the opposite side. So for example, if you have the strong resistance level, it's finally broken, then it's retested as support. That retest could be a nice long opportunity. So I'm going to get to that in the next slide. And a warning, something to remember. Just because a support resistance level is broken, it does not necessarily mean that it's absolutely going to flip bias. And what I mean by that is like there's other scenarios. You have swing failure patterns, all types of different things that you have to be on the lookout for. But because this is a beginner's level series, I'm not going to get into all that quite yet. But I just wanted to make it, it's not always black and white. It's not always like clear cut. It's either a yes or a no. It's there's other things that you have to take into account. Being a trader, and also like you're not always going to be right all the time. Like you're going to make mistakes. You're going to have bad calls. And trading support resistance levels, like it's the same thing, right? But statistically speaking, the things that I have talked about are true for the most part. So again, just because the support resistance level is broken, it doesn't mean that all of a sudden, if you flip, like let's say you have a resistance level and you break through it, it doesn't mean that it's going to flip to support. Now you hope it does, and that's kind of what you're looking to have happen, but price could knife right back down through it. Like it happens. But there are, like I said, there are other things to be taken into account, which will be shared later on in the series. All right, so here's an example of resistance turning support. So this is basically what we were talking about in the last slide. That doesn't always happen, but this can give you really clean, really nice trade entries. So again, this example of resistance, this red line is your resistance. You see price came up and came right into this resistance level, backed off, another tap, backed off, another push into resistance, backed off, and before it broke through. So price broke through. Now your resistance level is gone. And what happens next? You actually get a back test of this level. So again, resistance breaks through. You get a back test at this former resistance level, now confirmed as support, and price pushes higher. The entry here that I was talking about that could give you really nice potential trades is this right here. A lot of people will long breakouts, which, it's not that they're not successful. I just think that honestly, breakout traders, a lot of times, I think a lot of them get wrecked, to be honest. Unless it's, then again, there's, future series, you're going to look in, when you talk about volume and you talk about all the other things we're going to talk about, there's some other things that can kind of confirm, that give you a better judgment on if this trade is going to work out for you or not. But typically, the better risk reward trade is waiting for a retest. right? So again, you have this really critical resistance level, price pushes through it. It's the back test of the resistance level that could give you the nice long opportunity, because again, the reason why this level is a nice long opportunity is because your invalidation is simply losing this level again. So you don't have to risk a whole lot to find out if you're wrong taking this long trade, because again, if price just works its way back and you lose the, this becomes resistance again, then you're out of your long trade. So it's a really nice risk reward opportunity here most of the time to take that trade. And so here's an example. Again, it's basically the exact opposite of what we just talked about, but this green line is your support line turned into resistance. So you get your bounces off of your support line. Before price breaks through it, you lose your support, right? So now this could flip into resistance, which is exactly what happens in this scenario. So price breaks through it, you get your back test of this level, price starts to move off of it. You see that this level is now being respected as resistance instead of support like it was previously. Again, another potential trade opportunity here, which in this case would be a short trade. And your invalidation is very close by, because if price regains this green line, essentially pushes back up and starts treating this as support again, then you know you're wrong on this trade. So again, another potentially nice risk reward opportunity. And these are just the types of basic, the basic types of trades that you can be looking for when you're using horizontals. It's really that simple sometimes. And now we're going to actually move on to some more examples, and they're going to be a lot more fun because they're actual real charts. So let's take a look. All right, so this is 2018. This is the BitMEX chart. This brings back the BitMEX memories, let me tell you. I remember trading this incredibly well. And what I mean by well is I remember this price action very, very well. Essentially, like what I want to show you here is, this was our 2018, this was our high, right? $20,000 high, former all-time high. Price pushed all the way down to this support level, okay? Which was essentially, you see these candles right here that kind of gives you like the first hint that this is a support level, right? So basically price moved up through it. You got your back test of this level, and then just rocket ship takes off. Well, what happens after that? Price actually comes all the way back down to this this level, right? Perfect test off of this level before it pushes, before you get a retracement. Over time, price comes again, tests this level, holds as support. This is kind of your, I know it says 5,800 here, but this is like a little bit of a zone. This is basically your 6K level. So back in 2018, when we were trading this and we kept getting those bounces around 6K before you got your flush, right? So again, here's your level, nice push up, back test, really strong reaction off of that, pretty strong anyway. Comes back down to test this exact same support level again, weaker bounce, support level again, even weaker bounce. And then you start kind of grinding this, at the top of this. It's not like perfect, but you're basically grinding 6K before you get your flush. So then you literally just lose this level, right? So this is a very, very big, important level. So you get your flush through, which by the way, goes back to what I was saying. The more times you test a level, the weaker it gets. This is a prime example of that happening. This level was tested many times and eventually just gave way, right? This wasn't support anymore. So you got your flush all the way down to 3,000. Price spent quite a bit of time away from it, consolidating here. And then we came up to test it again. And this happens a lot of times. So when this becomes, when you have a really important level like this, oftentimes price came back up, and I expected this to hold as resistance a bit better than it actually did. But really, price just came up to it. I mean, you see a little bit of a tap there, and then boom, just blew right through it. and on the 14K. I mean, we really, you know, and this happens from time to time. Like when you have a very clear cut, you know, you did get a touch here, but you know, price just went right through it essentially. The following weeks, you got a little bit of, you know, a little bit of consolidation here, not very much at all before you got to move up. But yeah, this was incredible. This was very, very memorable. So let's look at another example. So here is a fun one. Actually, I'm going to do something a little bit different. So this, I mean, this support, the theory of like support and resistance, it works in any type of trading, any market you can think of. It's a support and resistance, very, very critical, basic theory that you know, you need to understand. So here's an example. This is the Amazon chart, and this is on a daily time frame. So every candle that you see is actually a day. So I have this set up in replay mode, and I'm gonna play this and kind of walk you through. But you're gonna see a very, very nice example of a support and resistance level, and how, you know, like how to use it when it comes to trading and even stocks. So if we're going to press play here, and we're going to let it play out for a little bit. So this is moving kind of quick. So basically price is moving up. So we're in 2018, right? So here we go. And there's your level. So right here so far, okay? So here is your level. Price rejects off of it. You know, price comes right back up to this level. So this is your second touch. So already here, you can see, let me zoom in. So here is your level. Price backs off. This comes up right close to this level. So this is telling me that this key level here is actually pretty important. Price continues. So you can see already, right? So price came up really, really, really close to this resistance level and pushed off all the way down to $1,300. So you went from over $2,000 all the way down to $1,300. So let's see what happens. So here comes price making its way back up. Zoom out a little bit. Boom. There you go again. Move this up a little bit. So here's your levels, right? Your test. Price, you know, massive move to the downside. And what happens? So this is in December of 2018. In July of the following year, price comes up and perfectly taps this resistance level. How is that? Right? And you got a nice rejection off of it. You can see like really good rejection off of it. All right, so now we got some crazy stuff going on. So essentially what happened here was you had a gap. So you had a big gap up, right? If you look at this level, you pushed above this resistance level. So now it's support. Price pushes higher. And then you have something even crazier happen, which I know that this happened to be a Friday. So this was a Friday close. And then on Monday open, you had a gap down. And look at this. So you had a gap down below this key level, and it back tests it perfectly before price moves down, which by the way fills this gap that's here. But again, this level is coming into play in 2020, which began in 2018, right? This is when this level started to form. Just amazing. So again, here's your full outlook so far. You got your level, you got your first test. So this is telling you now, okay, this level is valid. Big move to the downside. So this is really, really important resistance. Price comes all the way back up. Perfect test. Big rejection off of that too. So again, 3 touches. This is good. Like this is telling you this is a very important support resistance level. Then you get this that I just already walked you through, which again, you have the gap below. So you know, gap down below this level, back test, and big push off so far. Let's see what happens. And there you go. Price comes back, right? So you get your push down, price comes back. If you zoom into this level just to kind of see what happens, amazing. So you get your perfect test. Bit of a, I'm gonna say that's a rejection, but you know, you can see the wick here. You wick right back up to this key level. And then the next day you push above, close above this key level. Look at the next day. This kind of gets hard to see. You don't have to zoom in, but look at where your candle closes on this day. And then you open here, boom, big move to the upside. Let me try to back us out again one more time. I mean, and then from here, it just, price just rips through the upside, right? So you cleared, right? And it keeps going, by the way. So it's like, you can see how important this level was for so long. So literally September of 2018 all the way to April of 2020. But this one single level was so critical to trading Amazon. Just this one line alone, not looking at anything else, any other indicators, anything else that you can think of. If you only understood how like this resistance level worked, you could have made multiple really nice trades off of this level just by knowing this one level existed. So that is a great example of a support and resistance level and how price interacts with them if you find the correct ones. So this is Matic USDT. This is kind of a live example. So this is one that, you know, I have some key levels essentially that I am watching, you know, that I'm picking out that could become nice trade opportunities in the future. So I'm going to start by the furthest, you know, I'll work my way back, before, you know, back to front. So the first thing that I'm kind of keeping my eye on, this is an important support resistance level, is this key level here to basically $1.43, right? So it kind of starts back here. You got a, you know, you get a little bit of a close before here. That's totally fine. But you get, you know, there's multiple wicks here showing you that this level is pretty important. So this is where it starts for me. And then price moves to the upside, right? So basically you're kind of, you know, you put in your low here, price starts to move higher and is building, you know, you see these wicks here that I talked about. Price moves up and starts pushing back down. You lose this level, okay? So now what was support here doesn't hold up when it's tested here very well at all. You actually lose this level and then you come in to back test it. So this is where, you know, again, you could have potentially looked to take a short trade here if you wanted to, because again, reclaiming this level is essentially like your cue telling you that you're wrong, right? And that's very simple terms. But what happens? So your support flips into resistance, and look how many tests you get. So price, you know, you lose this level, you back test, two really nice wicks there, backs, you get, you know, backs off. More wicks here, price backs off even deeper, and then you come up for one final time here. This is actually a nice swing failure pattern right here. This is like, I'll get into that in future videos. But you basically take out any of these highs that were sitting here, you close below this key level, and you get a big move to the downside. This is a big move to the downside. In fact, I mean, we can just for fun, from this wick to low, that's, you know, 35% move to the downside, and every candle is an hour, right? So this happened relatively quickly. So this level, is this $1.43 level important for me to watch going forward? Absolutely, right? And so for now, you treat it as resistance because price is below. Was support here, flipped into resistance here, very well-defined resistance, and price backed off. Now there's kind of a secondary area that I'm keeping an eye on. it's less tested than this $1.43. So I know this is a very important level to watch. So this is less tested to a degree, but still very, very valid, right? So I'm using this level here, which price obviously, you know, like flushed down pretty heavily, but it's this back test that is right at where these wicks are. So this back test, very clean, nice rejection off of it. Comes back up again, doesn't get all the way to this level, but still got another move to the downside, right? Which, by the way, now, not to confuse you, but now I'm starting to build this key level. I'll get into that in a second. But what happens, right? So you have your level here that basically confirms as an important level here on this wick. So now I'm interested in this level because I can tell like this level is being respected so far. Well, it gets tested again perfectly. So you see the wick right at this key level, it's basically $1.25. So you have your wicks here, another perfect back test, price moves down, another flawless back test, price moves down. Am I interested in $1.25? Absolutely, right? So now I have two levels that I know have really good interplay with them. So naturally, like these, I'm going to be paying very close attention when price approaches these levels. So now you have your third and final level. I shouldn't say final, but it's the final level that I'm going to go over here. Okay. So it's basically the similar concept to the, to this one. You have a wick, price moved up, tested this key level, backed off. Where did it come to? Basically, it's hovering right around where this wick is. So you have this wick, then you have these, you have these wicks here that are telling you this level could be very important. And it's at $1.01, which is what? Very, very close to a psychological $1 level. It's a nice even round number, right? $1. It's a very important psychological level. So this gives me added confluence that this level is likely to be very important. Now, it also hasn't had as many touches. So if price does come back down, I would venture a guess that you could see a nice bounce off of this level if it's retested. So this is why this level is on my chart. It's not as well defined as these previous levels are, but it's definitely one that I would pay attention to going forward. So that is how you can look at a chart like Matic and basically find support resistance levels to trade off of. And these are very simple horizontal support resistance levels. And sometimes that's all you need. I know people who make a lot of money that just trade horizontals. You don't always need the crazy fancy technical, the crazy fancy indicators out there people are using. But I will say, this at the minimum, it's really important to understand this and how this works, because it's going to very likely help you become a much better trader if you do understand this, the concept, the theories behind support and resistance and how it works. But again, this wraps up this video. This is the introduction to support and resistance. So I hope you found this helpful. And, the next couple of videos are going to dive deeper into support and resistance, get a little bit, get into a little bit tougher, more in-depth stuff. But again, just to, you can see how really well respected just simple horizontal lines are on a chart. And you can definitely use these to trade off of. So that being said, we'll see you in the next video. Trade safe out there. Have a good one.